the question is what drives the 4-year cycle? It was for a long while, people in crypto thought it was to do with the Bitcoin halving that happens every 4 years. And therefore there's a supply shock. But each year now, the supply shock is less each time. So it can't be the dominant driver. But then when you look at all assets, they're all driven by a 4-year cycle. And that was the cycle of the rolling or refinancing of the debts. So then if the structure of the debts is most important, what could have changed? Well, back in 2021 and 22, interest rates fell to 0 again. So they extended the duration out by a year and got it to about 5 years. So if debt maturity and the refinancing of it is the dominant factor, then if they've moved out from 4 years to 5 years, the cycle should elongate. And that seems to be what is playing out by all the forward-looking indicators that we use. It says that the cycle doesn't finish until maybe this time next year. Mm-hmm. So that's a brave call, but it's a probabilistic analysis. And when people say, yeah, but the famous words of this time is different, I'm saying it's not different. It's just based on the debt. It always was. So if it's based on the debt, nothing's changed. The debt maturity has been extended to 5 years. End of story.
Raoul Pal says the crypto cycle is no longer mainly driven by Bitcoin halvings because the supply shock keeps shrinking. Instead, he links the cycle to global debt refinancing, which has now stretched to roughly 5 years after rates dropped to 0 in 2021-2022, meaning this cycle may peak next year. He compares today to post-World War II financial repression, where governments reduced debt while productivity rose. But with populations now shrinking, he expects future growth to come from AI, robotics, and blockchain rather than human demographic. As currencies keep getting debased, people are moving toward digital systems. That adoption strengthens networks like Bitcoin and stablecoins, while renewed institutional inflows suggest the next major phase of growth may already be forming.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Okay, so we've lived through this before, and it was the 1950s. We had massive debts after World War II. And what they did was financial repression, which is you keep interest rates below trend rate of growth or CPI. And you try and inflate away the debt. In the meantime, try and increase productivity, i.e. grow GDP and lower the debt burden. And then what happened over time is they managed to get rid of debt to GDP from being 100% of debt to GDP to down to like 20%. And they had a perfect 4-year cycle within that one too. And that process took until the 1970s. What changed? What changed was go back to that GDP formula. Population growth, productivity growth, debt growth. They got productivity growth higher from technology. Debt growth, they've been shrinking. But the big change was the baby boomers. Population doubled. And then doubled again almost in the world. And those people basically drove economic growth. Okay, so this time around, we're in the same set of circumstances. We have massive debts. Trend rate of GDP is too slow. How do we pick it up? Well, productivity growth. That's probably going to come from AI and technology. Use of crypto rails makes the financial system much more efficient. We can capture more value. Debt growth, well, that's stopped, much like it had in the 1950s. So it's population growth. Well, if you look at all the forward-looking population, they're all shrinking. Every country is going to shrink its population. And that's, if we look at the births, deaths today, that tells you what the population is going to be in 20 years' time, or the working population. So we're fucked. But this time around, we have synthetic humans, which is AI and the robots. And not only the synthetic humans, we can create billions of them, and they're smarter than us and better than us. But how long does that take before it happens? Well, we're not there yet. People are using the technology, but it's not embedded in everything, but it will be. So my guess is somewhere by around 2030, 2032, we completely transitioned to this new world I call the economic singularity, where GDP growth goes weird because we've got infinite population growth. So that changes the whole formula. Productivity goes through the roof, but who captures it? Is it us as humans? Is it the machines? How does the system work? How does investing work when you've got AGI? I don't know any of these answers, but I know that they have to continue the debasement trade until that happens, until the trend rate of GDP picks up and they can lower debt to GDP. And so I think we've got until 2030, 2032 of this system operating. And what it's doing, it's causing a forced migration into the new system, which is blockchain. So we're by continuing to debase, the knowledge of what is happening is increasing. That is forcing the adoption of the new system. Because of how the new system works, the more people come onto the network, let's say Bitcoin, the more the number go up, the more people are rewarded by doing it, the more people move across. And that's the good thing to do as well. And I think the governments understand this. I mean, having spoken to the Department of Defense about this years ago, they're like, yeah, this makes total sense. Over time, we need to migrate people across, and then it gets rid of a lot of the fragilities of the economic system. So that's the trade. That's what's happening. It's a migration into a new world that's being forced by the debasement of currency that won't stop until the rise of the AI and the robots. And then after that, we have no fucking clue how it's going to work.
Raoul argues the crypto cycle is no longer driven primarily by Bitcoin halvings, since the supply shock weakens each time. Instead, he ties the cycle to global debt refinancing, which historically runs on a 4-year rhythm but has now stretched closer to 5 years after near-zero interest rates extended debt maturities. He says this means the current cycle may peak next year. He compares today's environment to post-World War II financial repression, but with shrinking global populations, future growth is more likely to come from AI, robotics, and blockchain rather than demographic. As currencies continue to be debased, adoption accelerates toward digital systems like Bitcoin and stablecoins, supported by growing institutional inflows and network effect.
Yes, the business cycle hasn't picked up yet. And the business cycle is the strongest cyclical driver. So we've got the debasement, the printing of money, but really the business cycle has been subdued because interest rates have held high and other factors. So that is what surprised us. But this is really, it's a way of representing the elongated cycle. Normally the ISM would have picked straight up and we would be now with the ISM at, let's say, 57 or something, looking for the peak. But we're not. We're below 50. But the forward-looking indicators suggest that it still continues as normal. So what we've done is taken a business cycle that's this long and stretched it out a bit longer. And what we've seen is this year was that, the extra year in the middle.
Raoul explains that the crypto market is being shaped by debt cycles, technological innovation, and currency debasement. With AI, robotics, and blockchain adoption accelerating, digital assets like Bitcoin and stablecoins are becoming essential in the global financial system. Institutional interest and network effects are further fueling growth, signaling a potentially strong upward phase in the crypto cycle. Investors should watch key trend lines, like Bitcoin's $100,000 mark, and remain patient as the market absorbs liquidity and transitions to this new system. The rise of AI and synthetic humans will redefine productivity, wealth, and investing, making crypto a central part of the evolving economy. Do you think Bitcoin can hold above the $100,000 trend line and trigger the next major rally? How do you see AI and blockchain reshaping financial markets in the next decade? Share your thoughts in the comments.